Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and all the market strategies you need to follow for this fresh and new day. Remember, it's also the BSE Sensex expiry for the week as well, and the derivatives contracts will expire today. We'll have to see how the markets will move up. Remember, there are a lot of global cues that the markets will be reacting to as well. But let's start off by understanding what happened as of yesterday. So we've seen the Nifty cross above the 25,300 mark and ending at a 3-month high level in yesterday's trading session, continuing with the upward momentum over the last couple of sessions as well. We've also seen that the Nifty Bank has continued to rally for 11 straight sessions as well, and that's going to be a key watch on an index today as well. And the Nifty is also set its sights now on 25,500 on the upside. What could further the momentum today is the fact that on the global front, we have seen the US Federal Reserve cut the rates, the policy rates, by 25 basis points overnight. The markets were clearly anticipating for that to come in, but the big question is if it is going to be the start of a full easing cycle as well. As far as the guidance is concerned from the US Fed, it was rather mixed. Both the dots, there were also indications of 2 more cuts this year, and the statement was rather dovish than was being expected. At the presser, there was a discussion around the downside risks to labor market that were meaningful, and Jerome Powell also characterized the cut as risk management cut. This statement was seen as a hawkish statement as well. Now, following this, we've actually seen the US markets, they end mixed in the overnight trading session, but the US futures inched higher in today's morning market cues as we were getting. The session was volatile for the US throughout the course of the overnight trade. The early rally was fading towards the close end. Dow Jones still managed to end above 0.5% higher in trade. We did see the Nasdaq and the S&P 500, however, ease a bit in the overnight trading session. This morning, we've seen Asia markets also trade mixed in trade. The Nikkei was up by about 0.8%. In fact, was seen at a fresh record high as well. This was rather led by the strength in real estate and the technology stocks there. Investors are now going to be watching out for Bank of Japan's 2-day policy meeting, where most of the economists again expect the rates to be kept steady. Meanwhile, Kospi added about 0.8% in trades. The ASX 200 slipped by 0.5%. However, we did see the Shanghai and the Hang Seng also trade mix in the early morning trading session. However, the Gift Nifty is indicating a positive start yet again, a 71 point of an uptick, and right now you can see a 25,500 point coming in right at the pre-open trade as well. So let's see how the markets really shape up in trades today, and of course they will be reacting to Jerome Powell's commentary on the future rate cuts and how that will impact on India's export-oriented sectors like even IT will be important to be seen in today's trading session as well. Following the Jerome Powell's commentary as well as US Federal Reserve's rate cut, we've also seen the gold prices surge to an all-time high as well. In fact, we've also seen that the gold prices are now hovering above $3,700 an ounce on the international aspect. So that's something that we are going to be clearly watching out for. But let's actually welcome our guest on board. We are watching out for Mr. Abhishek Basumalik to join in on the show with us. But let me quickly first help you understand as far as some of the stocks in news are concerned and how some of those stocks could be in focus in today's trading session. So today you could keep an eye out on the tire space. Apollo Tires could be in focus. Remember, last couple of days the stock was in focus on the back of becoming the new jersey sponsor of Indian cricket team. Now it has also announced a cut in product prices by 300 rupees to about 2,000 rupees effective September 22nd. This is in order to pass on the benefits of the GST rate reduction to the consumers at large as well. So in case you're looking forward to buy some tires, Apollo Tires has already announced from 22nd of September you could be looking at cheaper tires out there in the market. Cochin Shipyard from the defense space is also going to be in focus. It has secured a 200 crore rupee deal with ONGC for a repair of a jack-up rig, with the project scheduled to be completed within 12 months. That's going to be in focus. Poonawalla Fincorp is another one that I'm keeping a keen eye out on. The company has cleared the allotment of 3.3 crore shares valued at 1,500 crores to its promoter, Rising Sun Holdings, increasing the paid-up capital to 162 crore rupees. Now, Dixon Technologies from the EMS space is also going to be in focus. The company company is actually set to acquire a 51% stake in Kunshan Q Tech Microelectronics in India for 552 odd crore rupees in a move to aimed at strengthening its mobile IoT, that's the Internet of Things manufacturing operations as well. Indo Solar is also going to be in focus. Here, the promoter Vari Energies is now planning to divest about 61 lakh shares, representing 14.6% stake through an offer for sale on September 18 to 19 to meet the minimum public shareholding norms as well. So keep an eye out on that. Cohance Life Sciences, another stock that could be in focus. Here, the promoter Just Miral Holdings is likely to sell up to 5% stake in the company via block deals, is what we're given to understand from the reports that are coming to us, for an offer size of 1756 odd crore rupees and a floor price of 900 rupees per share, as what we are given to understand. But let's welcome our guest on board, who's joining right in on the program. Mr. Abhishek Basu Malik joins in. And he's going to be sharing with us what exactly should be expected as far as the markets are concerned. Warm welcome to you, Abhishek ji, and thank you so much for taking the time out. Important day of trade yet again, because we are going to be seeing a reaction to the Fed rate cuts, the first rate cut that's happened in 2025 and the longest one that we've seen since 2024 till now. This was being anticipated by the markets at large, both globally as well as in the domestic markets too. Now, the good part is that, he's also signaled about two more rate cuts coming, and it's not just a one-off at this point in time. How are you looking at that with respect to the Indian markets, what it could do to the flows as well?
So, first of all, good morning to you and all your guests. See, US rate cut was in the offing because the continuous pressure that the US president was sort of putting on the Fed, uh, and also the fact that inflation hasn't spiked all that much in the US as was expected. Growth was tapering off. Jobs numbers were a very, very big disappointment. So the rate cut was in the offing. Whether what happens in the future about the following two rate cuts, that remains to be seen. But right now, I think this is going to be a sentiment booster, at least for the US markets. Maybe in the initial, we could get an initial rub off today in the markets. Whether it persists is something that we need to, check.
Abhishek ji, help us understand when it comes to the impact on the bullion, gold and silver on the back of these rate cuts as well. How should one be really looking at that? Already, this asset class has, outperformed the equity as an asset class by a huge margin this year as well as in the last year as well. In the last 1 year alone, we've seen a 45% uptick on gold and silver. Of course, this was largely led by the geopolitical tensions, the uncertainties that were shrouding the world as well. Now, with the rate cuts coming in again on the financial assets, how do you expect gold and silver to perform, and what should an average investor's approach be here, even at record high levels?
See, two things. One, I think primarily gold buying is happening, or even silver is happening because there is a lot of, in fact, a lot is an understatement, but huge buying from various central banks of the world. Added to that has been the ETF buying across the world from retail investors globally. So that has actually helped the price of gold, silver, precious metal. So what we probably are going to see whenever the world is pushed into uncertainty, people tend to move to hard assets. So gold, silver, real estate, land, copper, zinc, aluminum, so on and so forth. So I would expect that most metals, real estate, land, gold, silver, to continue to do well in the short to medium term.
Okay, fair point. Let me also just quickly ask you with respect to what is the overall outlook on the markets from here on as well. When it comes to the Nifty, we've already crossed over 25,300. We are at the 3-month high. Today it's going to be setting its eyes on 25,500. We are inching closer now to all-time high levels. Do you think the fear index has also slipped to, an all-time low as of yesterday? Do you expect expect, this to further propel the markets higher to erstwhile highs? Is the worst behind? Can we say that safely now?
If you remember, we when couple of months back, maybe 3 months back, when we were discussing, I used to tell that by say July, August end, the rate of change of this tweeting of the US president, etc., is going to go down. The world is going to start becoming a little bit more stable. And then we are going to see a sustained up move in the Indian markets. We're probably a months out from when I was thinking things would subside. But I still stick to that, that view that ultimately the biggest sort of volatility is coming basically from the US president's office, right? Globally. And that cannot continue in the format that it has been going on. At some point, most of the quick changes that the president was looking for would be over, and then it will go on becoming incremental from there. Now, my sense is that we are probably getting to that stage. Once that is there, uh, once all the tariff things are sort of settling down, that is when the markets would have bottomed. My hunch is that maybe the Indian markets has already bottomed out. We are seeing we're seeing that struggle between the bulls and the bears, trying to push up the index, and the bears trying to pull it down. But that fight has been going on, and my sense is that the Indian companies, the corporate results are going to slightly get better from next quarter onwards, with the GST reduction coming in, the income tax reduction benefits flowing through. All of this probably, and we've had a very good monsoon. So I think slowly, Q2, Q3, Q4 results are going to improve. And with that, I think we should see a more sustained 12 to 18 months of the Indian markets.
Okay. So corporate earnings and an improvement there is something that we are going to be hoping for, at least at this point in time. Viewers, the pre-open tick, it started off with a sharp negative move, but 25,393 is what is being seen, at least at this point in time. 57 points higher. This is more comfortable level to really look at this point. But we'll see how it settles at 907 as well. Somewhere, do you think, Abhishek ji, when it comes to the kind of resumption or hopes of at least a resumption of the trade talks is concerned, is also going to be adding, some moves on the positive side on the markets. We've seen what has happened, that, the chief negotiator of the US was in India for a day. A 7-hour long discussion has happened. Both the sides have pointed out to a positive outcome on the discussions that have taken. Now, this discussion was not a trade talk, but it was to close any kind of gaps that still exist and to probably propel the next round that could probably now take place as far as the negotiations are concerned. We've also seen the leaders of both the countries, India and the US, now are taking to social media and talking about how they want to further the relationship between US and India, and probably also resolve the issues that are there, and maybe it should be towards a win-win situation. How are you looking at these positive developments? So far we have been still facing we are still facing that 50% tariff. Do you think there is any kind of a respite that could be in the offing?
See, there are two things that we have to understand here from a market perspective, not an economy, jobs, etc. Right? From a market perspectives, one is that the number of listed entities which are really impacted by the US tariffs is not that much, and they are not as they are not the very large cap, uh, big prominent companies. The biggest impact is on textiles, gems and jewelry, and so on and so forth, right? So the listed universe has very limited uh, sort of representation from these sectors in the indices. So from a market perspective, it is a more a sentiment problem than a actual problem. The other thing is that we've seen the worst, right? At 50% uh, tariffs, you can't get worse than this. So the markets has already factored in that 50% is there, and ultimately I think somewhere down the line it will settle down somewhere between maybe 10, 15, maybe 20% after negotiations. So
Okay.
uh, that's my hunch. It could be different, but the point is that the market has already discounted a 50% tariff, and anything that is going to happen is going to be positive from here. It cannot be, even if tomorrow something bad happens and US puts say 100% tariff on India, it's not going to make any difference because there's no difference between 50 and 100, right? We are not going to sell anyway at 50, and whether it is 50, 60, 100 makes no difference. Whether it is 50 or 25, maybe it makes some difference. Whether it is 15, 18, 20, it makes some difference. So that is where I think ultimately the ball is going to settle down, and we'll have to wait for that.
Okay. Could you also explain to us, for those who had been just waiting for this time correction to go by, to be aggressive on the equities, has the time already come? We've had a long drawn consolidative phase in the markets, a long drawn time correction that we have seen, largely on account of all these uncertainties in this VUCA world. Do you think all of that can safely be said that, is now on the back burner? Can one be aggressive with the deployment of cash right now in the equities?
See, there are two parts again to this. One is that when you are investing, right, whether you are aggressive or not, depends more, on your personal circumstances, your risk tolerance, rather than what the market is. That's number one. Second is that there is always going to be some uncertainty in the markets. There is never going to be, everything is great in the markets. It's never going to happen. So ultimately, uh, if you are investing for a longer period of time, say you want retirement, you want wealth creation for next 10 years, 20 years, then one mode of investing is obviously keep investing slowly but surely over these periods, because as and when you invest during these times when the markets are circumspect, then you reap the benefit of it once the market actually turns around and picks up.
Okay. The markets have settled in the pre-open. I'm just going to take a minute to show how the markets have settled. 25,440 is with us, viewers. So definitely we moved up higher, and we are looking at a gap up start yet again. 110 points of an uptick is what is being implied at the open today. At 9:15 when the markets open up, all the sectors could again be opening on a higher note. So there could be a broad-based rally that you could be seeing. All eyes will also be on the IT pack again. Remember, the IT index is already showing us ticks on the higher side. Almost a percent higher is what you could see this one to open at. Even the Nifty Bank, which has been on an upward rally for last 11 sessions, has crossed over important levels of 55,000, 55,300. Now is indicating a 55,797 kind of a start. So about 300 points further up is what you're looking at. So IT and banks will again be in focus. Remember, a lot of other sectors that have been hovering higher, defense, for instance, railways, for instance, even the export-oriented sectors like textiles, for instance, all of that will also be important to watch out for today. We'll also look at some of the pharma news, stories also getting into the limelight. So Sun Pharma could be in, the kind of focus today. IT names like Wipro, HCL Tech also are indicating a higher start. Banking names like ICICI, HDFC also indicating a positive start as well. We'll come back to it when 9:15 happens. But let's also discuss, like Abhishek ji, you started off by talking about the GST trigger that we are looking at least for now as the biggest trigger for the market starting September 22nd. Have you made any changes to the clients' portfolios by looking at this theme and how it unfolds over the next 3 months of the festive season?
Really, I think we've been sort of invested in consumer, in infrastructure, in defense,
Okay.
in engineering. So across the board, I think we've got a diversified portfolio. Uh, we've not made many changes, to be honest, because of this. I think as and when the GST benefits percolate down to the people, most of the sectors should start doing well. most of the consumer facing sectors definitely should start doing that.
Okay. Auto sector has been seen as the biggest sectoral winner of GST because the impact could be seen far and wide across segments. We could see ancillaries, we could see OEMs, we could see tractor makers, commercial vehicles, passenger vehicles, even two-wheelers at large. How would you select, since you're saying that, across the sectors the benefit could accrue? What is the right way to pick and choose the stocks from across the segment in the auto space too?
So I think again, if you have to have a company by company approach. I think
Okay.
overall autos definitely look good. Uh, there are two different segments which are doing well. So if you look at autos, I mean, personal vehicles, I think the SUV and the higher end market looks, very, very good because that is definitely seen some GST cuts. Also, if you look at the other side of the spectrum, which is the two wheelers, I think that also is going to benefit because it's going to make it much more affordable for larger number of people. And the best play would probably be through the ancillaries. The advantage of ancillaries, especially those which are not, related to whether it is ICE engines or EVs, is irrespective of the type of engine that is there, they are going to be around. So the risk of obsolescence that is there with some of the auto companies, that is not there with the some of I mean most of these ancillaries. So I think playing it through the ancillaries is a much better bet, and I think the number of ancillaries that is there in India is simply a large number, and you get a lot of variety, lot of different types of product manufacturers are there, so you can actually take your pick.
Okay, got that. Let me also welcome Mitesh, who's joining in on the program as well. Mitesh Panchal to track technicals with us on the panel discussion too. Mitesh, warm welcome. Good morning to you. Your sense on the markets, 25,440 is what is being indicated as the implied open. We could have a gap up yet again. We've been consistently moving for the last couple of sessions. We are already at a 3-month high. What's next for the Nifty? And if you could also highlight between Nifty and Nifty Bank, what would your top choice be?
Yeah, good morning, Sakshi. Good morning to the panelists and good morning to all the viewers. So, first of all, let's talk about Nifty. So, we have successfully crossed an immediate hurdle of 25,255. That was where the top has been made, recent top, that is on 16th of July 2025, followed by 24th of July 2025, where 25,280, 300 was not getting crossed. Now we have successfully crossed that. So now all the eyes are on 25,669, which is the recent high, which has formed on 30th of June 2025. So yes, there is a steam. We are forming a heart of higher bottom formation on the higher time frame. It is sustainable, and we are of the view, that's what we have said last time as well, that during the Deepavali time, we may say new high. So we are sticking to that view. We are of the view that Sakshi, one should not go with a choice right now, either a bank nifty or a nifty. I think in the trend reversal, one should focus on the stocks because that is where the maximum gain could be made. So as of now, our entire focus is on the stock specific, not on the index, because index has already crossed certain threshold levels. So we are expecting the index to move up, but majority of the action likely to take place in the stock specific. So what we have selected is two sectors. First is a PSU. Within PSU, there is a split. So, and in the entire PSU, one basket which we are looking at is a PSU banks. So PNB, Canara Bank, State Bank of India, Bank of Baroda. These are the four technical picks which we are recommending.
0.4% of an uptick is what you have, a gap up start for the markets today. All the sectors are up and about, with IT taking it away, over 1% gains for the IT stocks. Look at Infosys, that's the top mover, 1.6% higher. Wipro is up. HCL Tech, among the top 5 movers, you have the IT stocks that are definitely moving. Sun Pharma as well as HDFC Bank are the other movers on the higher end. Any draggers at this point? Far and few between. You have Hindalco, Bajaj Finance, Apollo Hospitals and Kotak Mahindra Bank is still seeing some cuts in the open, but most of the markets stocks are Nifty stocks are all higher in trade. Barring say now the metal stocks that are feeling some pinch, rest all of the sectors are holding up. Let's look at even the small caps and the mid caps. Small cap index is 0.2% higher. Mid caps are also about 0.2% up in trade as well. IT, banks, pharma, real estate and consumer durables and auto are among the top winning sectors at this point in time. PSU stocks mildly higher in trade. You have names like RVNL, PFC, BPCL, IOC, Oil India, even REC, all up and about in trade as well. Let me quickly look at the Nifty next 50 names as well. LTI Mindtree is higher. Avenue Supermarts has got an upgrade on the brokerage houses front. Hyundai Motor is up by 0.5%. Adani Green Energy, LIC is higher. Bank of Baroda and PFC, these are some of the names that are pulling up in trade. On the gainers and losers side, as far as the Nifty 500 basket is concerned, you have names like Intense Technologies, any few ones that we could actually mark out for our viewers here. Kesoram Industries, no, actually none of them which we can mark out very clearly for all our viewers here. Mitesh, how would you see the opening? Could
Sorry,
you
I was on the
unmute?
mute. Yeah, I was on a mute. Yeah, so sorry. So yeah, opening is good. So far, so good. I think two sectors probably which likely to outperform today is IT, undoubtedly, because we have seen a very good interaction in the beginning of the trade, followed by I think the private banks, as we have seen a good attraction in the beginning in Kotak Mahindra Bank and HDFC Bank. Followed by Bandhan Bank. So I think banks and IT looks pretty promising today. Probably in the second half, we may have a very good buying attraction in the metal stock which you have mentioned. So I think so far so good. It's a promising start.
Promising start for the markets. Abhishek ji, coming to you on the IT pack. It is the worst performing sector of 2025, but are things finally looking up into this sector? Is it time now to look at the IT stocks at this point?
I think same thing. I mean, last week when we spoke, I was saying that IT has probably started bottoming out,
Yes.
and although the news surrounding the IT space still is very gloomy, probably you will start hearing more bad news from Indian IT services companies of layoffs, etc., that we've been hearing for all this while. But I think structurally things have started changing, because uh, on the ground I'm seeing uh, at least some of the larger companies getting projects. The deal flow has started again once more. So probably the worst is behind, and I think things is likely to look much better going forward.
Okay, clearly IT, as both our guests have marked out, viewers, 25 basis points of a rate cut by the US Fed is also leading to this impact that we are seeing, that eases out a lot of concerns for even the global clients for our IT companies at that space. Let's look at the recently listed company, Urban Company, 170 odd levels, a 2% uptick after that stellar listing and a debut yesterday that we also saw. So 162 was its listing price. Thereafter, the company continued to move up, another 2% higher in trade today. Let's also pull up some of the other spaces. So within the banks, now you have the private sector banks also inching up. But let me also understand from you, Abhishek ji, between the private as well as the PSU banks, where are you keeping your focus on? Because the PSU banks have started to now participate in the rally as well. So how are you looking at the opportunities in the banking space?
So right now, from a medium-term investment perspective, I think PSU banks are a better bet, simply because the valuations are much more compelling than the private banks. So
Okay.
much better options are available in the PSU banking space compared to private.
Better options in PSU banking space. Miteshji, do you agree? Are you also looking at more opportunities in PSU banks?
Absolutely. That's what I said in the opening marks. I think now the tide is turning for PSU Bank, and I hope the patience which we had since last a year or so technically is now being paid off. So we are of the view that going forward, yes, PSU Bank is good to go.
Okay, got that. IT is clearly the winning space, but banking is following suit. PSU banks, both our guests agree, is the space to watch out for. Let me also mark some other names that are hovering high in trade. Urban Company now further up, 4% up. Zen Technologies 5% higher at 1621 is what we are looking at this point in time. A 5% of a rally here. Heritage Foods is up by 3%. Ismo is up by 4%. Saregama, again there is news flow there, 3.2% higher. There is a Nuvama report on Saregama with a buy rating and a 630 target price on that front, with the management key insights on talking about the music content that the company is focusing on with new investments. That's leading to some move on that front as well. So those are some of the names that we are looking at. One MobiKwik, although, is continuing to stay weak. Remember, there was a fraud news coverage that really led to some denting of the sentiments, and that continues to be under pressure, at least at this point in time. But Abhishek ji, when we talk about the other sectors beyond the heavyweights, IT and banks as well, are you looking at the PSU space at large, defense and railways also, for this fresh move that is being seen now?
Absolutely. I think there are a lot of companies in the defense and the overall engineering, etc. space, uh, railways, that look quite interesting, quite compelling.
Okay.
So definitely looking at those. See, like
Okay.
I always say that it's not about whether they are PSUs or not. Ultimately, what matters is the kind of business, the industry that they are in, and how they are performing. It's just a matter of it's just that for a PSU, the promoter is the government, and uh, for private companies, it is a private entity. Doesn't mean that all private entities are extremely well managed. Conversely, doesn't also mean that PSUs are poorly managed, or vice versa.
Okay. Mitesh, your choice of stocks within defense and railways, are you also looking at those and the fresh move that's developed over the last couple of sessions? Are you looking at maybe the shipbuilders, GRSE, Cochin, Mazagon, or are you looking at HAL, BL for that matter? Even in railways, could you share some picks?
Yeah, so as far as the defense is concerned, I think Kochi Shipyard, Moscow Dock, BEML is what we are looking at, including Bharat Forge. And as far as railway is concerned, yeah, the promising names which you're talking about within the railway is what we are looking at. For example, Rail Vikas Nigam at 261 is our preferred choice here.
Okay, got that. But I was talking about this newly listed company, Urban Company. It had a stellar IPO and subscriptions, and of course, a good listing at 60% premium. Continues to move up higher at 172 odd levels on day two, Abhishek ji. How have you looked at this IPO as an opportunity for investors, and what are you advising for those who did not get the allotment? Very few of them have got the allotment because of the huge subscription figures that we actually saw on that account. So for those who are looking at Urban Company in the listed space, do you think it still holds promise?
Wait for months or so, let the price settle down, and then you can sort of take a look at it. I think as a company, obviously, uh, for most people in urban areas, at least in the large cities, I think we are all sort of consumers of the company, and as such, I think they've got a fantastic business going. So. What is more required now for us as investors to understand is what is the competition going to look like? What is the return on equity that they can generate? Uh, and ultimately that those numbers etc. will drive the valuations that you will get for urban company. Right now, it is more of the IPO froth. Let it play out, and then you can always take a more, you know, much better call on the stock.
Fair enough. So give it a month to play out. Look at better numbers or prices to take an entry. The company is good, the business is good, but it's already rallied in the first day itself, and one has to give it some time before you look at it for a better risk reward on that front too. I wanted to also ask you, Abhishek ji, on the telecom space. Today there is a brokerage report of HSBC on the telecom space when they are betting big on the tariff hikes coming in 2026, which has increased as a probability. The growth drivers, as they believe, are continuing for both Airtel and Jio. ARPU growth, home broadband surge, as well as free cash flows and dividends to grow as well. For Bharti Airtel, they've given a 2200 target, and for Reliance, they have raised the target price to 1750. Then they are also talking about the Jio IPO that's coming in 2026 as well. How are you looking at the telecom theme play out until the IPO comes in? Should one bet big on Airtel, or should one save some cash for Jio?
Uh, Honest answer is I have no clue. I think both Reliance and Airtel are going to do well. Uh, but very difficult call to take because uh, both have been doing well. I think Bharti has, as a stock, has performed extremely well. How long can they continue? How long will the growth, continue to come before it sort of stabilizes and tapers off?
Yeah.
Is something that is very difficult, at least for me to sort of work out. So I would sort of give it a pass.
Give it a pass. Okay, Mitesh, anything specific in the markets beyond IT and the banks that we've discussed that is appealing to you at this point?
I think auto, and from auto we have Tata Motor, which is now showing a promising sign at 726. So above
Yeah.
722, it's a fresh buy. Apart from that, I think what is looking promising is UPL, even at the current level of around 710, it is looking promising. So two stocks in radar as of now. First is Tata Motors, second is UPL.
Okay, got that. So that's the auto space that we've already discussed with Abhishek ji. One other space that I wanted to discuss is the consumption theme again, and with respect to e-commerce play and retail play is something that I wanted to discuss, Abhishek ji. We'll talk about the online opportunities between Eternal, Swiggy, Nykaa, Mama Earth, and a lot of those tech stocks, tech companies which are focused on the e-commerce, e-marketplace kind of a space. And we'll also talk about Avenue Supermarkets or a trend for that matter. All those retail basket plays, AB Fashion and Retail, which is recently launched, owned as well. All of those plays too is something that I wanted to discuss with you with the upcoming GST rationalization and of course the festive season at large as well. I'll also just highlight one more point. On Eternal, we have a new report from Goldman Sachs. They have a buy rating and raised the target price to 360 now on the back of Blinkit's growth momentum that continues to remain strong. On Avenue Supermarts also, which has so far been a slow mover, but UBS has now given a buy and raised the target price to 5600 on Avenue Supermart. Remaining bullish on the growth, which is set to accelerate, strengthening own e-commerce space, winning business model that it bets on, and of course the large structural growth opportunity that exists as well. How would you look at this entire space and some of the stocks here, Abhishek ji?
I'm pretty positive. I think for most of these, especially whether it is Eternal or Zomato, Swiggy, uh, that is a space where I think consumer behavior over the last 5 to 6 years has completely changed. I think ordering in food has become a practice for at least a large part of urban consumers, and so that's a trend that is going to remain. They are going to be able to add on, small amounts of delivery charge, handling charge, etc., and start making money. Quick commerce, again, we are going through that process of making users, habit formation of the users. Uh, once that sort of completely gets penetrated, again that becomes very, very sticky. So uh, at least these quick commerce players looks to be on a very, very stable ground. Uh, Not too many competitors around as well. I was reading yesterday that Amazon is again starting to get into
Yes.
quick commerce,
Yes.
right? But till the time that they get in, we are not very sure what is going to happen.
Absolutely. Miteshji, your sense on the retail space, e-commerce space at large, which are your top favorite stocks here? Can they continue to move up? They've already been shining bright.
Absolutely. I think we need to look at the space from a different perspective. For example,
Okay.
as per our system and method, if you're looking at the consumption basket, we get four buys, Sakshi, five buys in the month of August and September. Let me quote that. First is Bikaji Food, second is Devyani International, third is Nestle India, fourth is Sapphire Food, and fifth is Jubilant Food. So based on our system and method, we are of the view that the retail space and this e-commerce space will definitely shoot up. Along with that, as you rightly pointed out, DMart and Eternal. So both, including Swiggy. Yeah, this is the space I think which will give phenomenal return going forward. So I think, yeah, definitely we are bullish on that, and one should definitely accumulate all the stocks at the current level. On the contrary, we are of the view that at least you should have 7 to 9% of weightage in the entire consumption theme in your portfolio as of now, at least for the next 9 to 12 months.
Okay, fair point. I hope this has also helped you out. Abhishek ji, before we let you go, the last question that we have with you is with respect to the upward momentum and how to play that. How are you advising the investors, those who have cash ready with them to deploy in the markets right now? What's the best way to play the up move and probably the rally to erstwhile highs?
So I think the best way, obviously, is to spread out your buying over, say, the next, uh, 2 to 6 weeks,
Okay.
uh, and keep slowly investing into the markets. I think that is the best way. Very, very difficult to precisely time, the ebbs and flows of markets. Very less sort of history in the world tells us that people have been able to do it successfully. So, apply a prudent approach. Just do it over stagger over shorter duration, because the markets look to be in the mood to go up.
Okay, fair point. Abhishek ji, thank you so much for being with us on the show and, of course, helping us with your insights across the board of parameters and opportunities that exist for the markets. Good to have you with us. Hope you have a great time till the time we see you next on air on Business Today. All right, Mitesh ji, we'll continue to discuss with you on the markets front. First 15, 16 minutes are done and dusted. Your sense of are we going to carry on the momentum today? Remember, it's also the Sensex expiry.
Absolutely, Sakshi. We will definitely carry on because in the first 5 or 10 minutes, it was IT stocks followed by the private banks. Now the PSU banks and the consumption basket is coming up. So HUL is hitting a new high, Colgate is hitting a new high, Nifty Next 50 is hitting a new high, Bosch is hitting a new high. So I think consumption theme is going to play. So today it is all about sector rotation going forward. So first it was bank, probably as I said, second half we may see a strong attraction in the metal as well as in the FMCG as well. So yeah, it's a sector rotation which is going on right now, which is helping the indices to stay at a higher level, and we continue to believe that indices are likely to stay higher. Probably, Sakshi, what we are looking at is a technical breakout of 25,500 because what we have is just 2 days left for the week to end, and for us, weekly close matters a lot. So we are of the view that going forward Nifty likely to close about 25,500 for the week ended 19th of September 2025. And if that happens, then it is going to be opening up a door for 26,200, 26,500. So yes, we are entering into a new range and we are looking at a positive close about 25,500 for this week.
Okay, got that. Let me just now do some stock spotting. Real estate is picking up pace, viewers. It's the next to IT sector among the top movers on the sectoral index front. Real estate names like Anand Raj has been in the move and continue to shine. Oberoi Realty, Prestige, Brigade, Lodha, they're all up and about in trade. Mitesh ji, how are you approaching real estate stocks?
So yeah, that is again one sector which is looking promising as of now, Sakshi. So in the high beta counters or a sector,
Hmm.
advisable only to go with the leaders when the tide is turning, right?
Okay.
So over there you have a safety margin plus you have a momentum to play with. In other stocks, if you go, definitely you have more gain to be made, but then the safety note is not that great. So we like to go ahead with DLF right now. DLF is looking pretty promising to us as of now at 790 with a stop of 781 can go long for the potential target of 820.
Okay, a fair point. Let me also just pull up some of the other stocks as well that are getting into a wide momentum. We've been looking at a lot of moves on the export-oriented sectors like textiles once again, leather, goods once again as well. Are you looking at these sectors with the hopes that the trade talks could be now progressing on the positive side, Mitesh?
Yeah, we are looking at actually. If you look at the entire chart pattern of Vardhaman Textile, so that is looking pretty promising to us. So Vardhaman Textile from the textile space is looking promising. At 445, we come in to go long with a stop of 420 for the target of 480 500. So from that basket, I think what is looking promising on the chart is VTL, Vardhaman Textile Limited.
Okay, fair point. Let me also just look at some of the other stocks that warrant our attention at this point in time. I think Poonawalla FinCorp needs an attention, 8% higher among the top movers on the markets today in the Nifty 500 space as we are looking at Prozone Realty from the real estate basket that we have been discussing so far. That's also up and about in trade. Sonata Software is up. Zentech we marked out. L&T Technologies is also another one. That's moving up in trade. Poonawalla FinCorp has been an erstwhile retail investor's favorite. Your sense it's moved to the high spot of the day and 8.5% higher volumes are also strong. Is it making a comeback which could sustain in momentum?
Yes, so based on our system and method, Sakshi, on 30th of May 2025, we had a buy on 403.75. So since then, our clients are holding the stock. We are looking at a trend reversal definitely because from a recent high of 475, stock has corrected a bit and made a low at 424. But since then, since last two weeks, stock is forming heart of our bottom formation. So what we are looking at, Sakshi, is a hurdle at around 470 to 500. We are of the view that the hurdle will be crossed pretty soon and stock will enter into a new trading range. So definitely at the current level of 490 odd, one can go long in Poonawalla FinCorp.
Okay, fair point. That's also gives some sense as to how to go about the space as well. Let me quickly also look at the broader markets, mid and small caps. Miteshji, anything within the small caps basket that appeals to you? A lot of stocks that are buzzing are Sonata, Zentech, Newgen Software, Credit Access Grameen, HFCL, Zensar Tech, Birla Soft. Most of them are, of course, from the mid-cap IT space. But what's taking your attention?
So I think what we are looking at, Sakshi, right now is again a sectoral move. That's what we have advocated in the beginning. I think the entire sugar space is looking pretty interesting to
Okay.
us. Within that, what we are looking at is EID Perry and Balrampur Chini. So I think that
Okay.
that space is looking pretty interesting. Second, if you see a pretty silent move in the recently listed auto space, that is Hyundai Motors. Right, that's what we have discussed earlier as well. So few recently listed IPOs are looking promising. Third, what we are looking at is the entire fertilizer space. So fertilizer space is also looking promising. So by and large, if you talk about the theme, I think the focus is on the agri theme. The focus is on the commodity. That's what we have been advocating since the beginning of 2025. And we are of the view that this year is all about commodity. So I think after the correction, where we are looking at is purely a consumption play, purely a commodity play.
Okay, got that. Let me also just dig a little deeper to find some more ideas that we can discuss. Pharma is also picking up pace, Miteshji. How are you looking at the pharma space as of now? Some of the OEM players are actually moving higher in trade. You have Biocon, Glenmark, Sun Pharma, Abbott, Natco, all of them in action right now. Anything within the pharma that appeals to you at this stage?
Absolutely. I think pharma is also a space where we are looking at a blend, Sakshi, here. So I think MNC pharma is looking pretty promising. Within that, what we have sorted out is a Pfizer India. And
Okay.
within the domestic play, we like the biggies. That is, we like Cipla, we like Dr. Reddy's, we like Torrent Pharma, we like Glenmark Pharma. So these are the stocks which have already qualified in the month of July, August, and September on our system. So total in pharma, what we are looking at is right from Newland Laboratories to Cipla to Reddy to Torrent Pharma, Glen Pharma, Biocon, Glenmark, and Pfizer. So these are the stocks which are spotted on our system and method. Our clients might have direct or indirect position into that. And again, like Sakshi commodity, we are of the view that yes, pharma, the tide is turning in pharma and IT both.
Okay, let's discuss commodity space then. How are you looking at the commodity space as of now? What is appealing to you at this stage? You briefly mentioned about the metal space. What about oil and gas space as well? Is that also looking good at this point? Remember, the crude oil prices are still lower and in a comfortable zone, at least at this point in time. How are you looking at that to play out for the sector?
Yeah, so if you're talking about refineries, we like only two stocks actually because
Hmm.
those these two stocks have qualified on the system. First is IOC and second is BPCL. So these are the two stocks which are likely to outperform going forward. Once the other stocks gets qualified, then only we'll be able to speak. Otherwise, other than that, as of now, the focus is on IOC and BPCL.
Okay, fair point. I hope this has also truly helped you out. Viewers, let me also just help you understand Nomura's report on oil and gas today. The crude oil prices have fallen on the rising OPEC plus supplies that have taken place. They're mentioning rupee depreciation could impact the margins of OMCs, but a sharp drop in benchmark Singapore GRMs may not impact India refiners much. They've also mentioned for OMCs, the fuel marketing margins have come off from record high levels in Q1 of FY26, may remain healthy at above 6 rupees per litre. They have a buy on all three OMCs as well, on HPCL, BPCL and on IOCL. They expect BPCL to be the best placed among all three. On the LNG space, Nomura believes lower LNG prices will be positive for Petronet LNG and for Gujarat Gas. For GAIL, they are also looking at how MGL and IGL could also benefit from the lower LNG prices as well going forward. So these are the stocks that Nomura is clearly looking at this point in time as well. One more stock that I wanted to pull up, and that's from the banking space. I forgot to ask you that time, is Yes Bank. Why is this stock in focus today, viewers? Remember, you've been, watching out for all the news flows that we've been sharing with you on how SMBC has been consistently acquiring more and more stake in Yes Bank. Now, SMBC has completed initial acquisition of 20% stake in Yes Bank. It has signed a definitive agreement to get additional 4.2% stake from CA Basque Investments, that's Carlyle Investments, and in the near term, Morgan Stanley has still given an underweight rating, given the view of a gradual recovery in profitability and not an immediate one. But we've seen that this stock has been a wealth destroyer of the past. But many investors who've still been holding through all these years with patience that someday the tides will turn, someday the fortunes will turn. Now that there is slowly and gradually a move on, a new player entering into the management space, how are you looking at Yes Bank? Is there an opportunity for those who may be still looking at a long-term outlook on Yes Bank?
Yes, actually, you have made a valid point. And what we quote, there is a famous quote which we have created on this: easy to get in, difficult to get out. So, in a stocks like Yes Bank, in a stocks like Idea, in a stocks like JP Associates or any small ticket source, it is easy to get in, difficult to get out. Now, there are two ways how you should approach this. First of all, I have Yes Bank bought at 50, 33, 35, whatever, right? What should I do? The only thing which you should do is please wait patiently. Don't try to average out the stock. This is the biggest mistake which the retail investors are making. The first thing is that do not average out any stock which have, fall down by 50, 60, 70% in your portfolio. Second thing, when the tide is turning, if you're a high risk trader, if you want to get into the game, if you do not have a simple philosophy of following the strict stop loss, please don't get into the stocks. So to all the viewers, for stocks like Idea or any low ticket size stocks, high beta stocks, if you want to participate, there are two kind of mindset with which you should approach. First, with a strict stop loss discipline, which is rare to follow, and second, if you are stuck at a high level, wait patiently. Once the tide is turning, Once your prices will come, you sell it off. And again, Sakshi, the third point is that you don't always think that you recover every loss. I mean, if I stuck up at 35 in Yes Bank, and if even 30-32 comes in, I should book partial loss and get out of it. I mean, never ever try to understand that the market will give you an opportunity to fully recover your loss. Somewhere you'll have to take that pinch of 5 or 10%. And if you do that, remember that at 100 rupees, if you're stuck up, at 80 rupees, if you're booking a loss of 20 rupees, 80 is now your capital in your hand, which you can deploy very well somewhere else and recover the 20 rupees. So don't make a habit of recovering everything from a single stock.
Okay, 9:45. First half an hour is out and we've held down to 25,400 mark, viewers. 90 points higher in trade. Slowly and gradually the markets are inching higher. First half an hour candle, what does it tell you, Miteshji? And what would you advise for the expiry session today?
Yeah, so as I said, slowly is the fastest way to reach where you want it to be, and that is how the index is actually allowing us to, understand the fact that I am going to stay at a higher level. So slowly and gradually, it is moving towards that 25,500 landmark. We are pretty clear that, Sakshi, this week we will have a close above 25,500, and that will give us a pretty strong feeling, and probably maybe during the Deepavali time, we may see trading at a lifetime high.
Okay, got that. Miteshji, thank you so much then for being with us on the program, helping us
Thank
with all
you.
your insights on the markets. Always appreciate your presence with us and with your wonderful research that you share with our viewers as well. Hope you have a great time. We'll see you soon.
Thank you. Same to you.
25,421 viewers, 91 points higher in trade. IT, pharma, all the export-oriented sectors, they are consistently in focus on the back of the US Federal Reserve rate cuts that are coming in. You can clearly see the cheer spreading in on those. IT sector is up by 1.3%, pharma is up by 0.5%, banks also taking higher. Only metals just slightly lower in trade, about 0.4%, 0.3%, but rest of them are all up. Look at India Wix, 2.4% lower, under 10 levels, 9.9 can be seen. Fear index is consistently on a lower space. That actually spells good news for all the bulls in the markets as well. With that, we wrap up the morning edition of Market Today, viewers, but do stay tuned as we continue to get you the market coverage on the other side. Remember, through the course of the day, we will also get you insights from Jefferies as they do exclusive interactions with us, and of course share with us which are the themes, the sectors and the outlook on the markets, a strategy that they're recommending to investors. They've had an Indian forum meet as well, and they're going to be helping us insights on a lot of differentiated sectors through the course of the day, so don't miss out on that one.
And welcome to Business Today. I'm Siddharth Zarabi, and today joining me is one of the most prominent market gurus across the world and a very well-known name